got some we got some good stuff. I got a lot of stuff I want to talk about tonight, so I really want us to get going. A lot of things to cover. This is always a real informative call. We on lesson 2. It's a lot to cover, and I even have a couple of extra things I want to add to lesson 2 if we can. So we're gonna jump right in, and welcome to the call. If it's your first time joining us, we're glad to have you. And if you've been on here before, welcome to the call. We got people on from all over the world. I don't know. I don't know what time it is in London, but we even got somebody on the call from London. So let's jump in, Barbara, and take care of the business so we can get going.
Yes, sir. All right, here is our disclaimer. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means that you alone are responsible for your actions in any trading or investing activities.
Thank you.
You're welcome.
I think my friend Johnny B I think he probably liked that disclaimer. Oh.
I thought it was different.
Yeah, Johnny kind of requested us to do something different. But Barbara, we always get started by talking about any homework or any quizzes that we had. So if you or Dr. Melville, either one of y'all can grab any quizzes we had from the week and let's go over them right quick.
We had 2. I can do the first one. The first one is, what is the golden rule? A, always trade with a stop loss. B, make sure you follow the rules. C, don't risk more than 10% of your account on any particular trade. D, control your emotions. E, all of the above.
All right. So we always want to know who wants to step to the plate, who's going to step up to the podium and take this quiz. Who's going to answer the question for us?
I'll say
I
C.
can.
More than 10%.
C.
Oh, we got several people. What was that? Come on.
C.
Don't trade more than 10%.
Always trade
What
with a
was-
stop loss. Excuse me, was it 10%? Oh,
10%.
more than 10%. I believe that's what C was.
Now, they
sound
all
like-
are great answers, but there's only one golden rule.
10%.
That's right. That's the key that I like for everybody to catch when we ask that quiz question that Lana pointed out. One thing that should stand out when you read that quiz is that the word rule, is that singular or plural?
Singular.
That would be
Singular.
singular.
Yeah, we've had some time where people say all the above, but if that word is singular, it can't be all the above. It has to only be one of the choices, right? So right there, we know it's one of the choices. It's not all the above. But when we know and understand what the golden rule is, that's so important when it comes to our trading. We always want to follow that golden rule. So great job, everybody. C is the correct answer. Never risk more than 10% on any particular trade. Don't be a Delvin Wright, Lana.
I would never be a Delvin Wright. I would fit the picture.
Don't risk 100% of your account.
Nope. I have not done any trading. I've learned a lot. I've not jumped in and done any trading.
That's good. You've been learning. We know how much you've learned from the beginning. You've done great. Well, Dr. Melville, which one of y'all gonna give us the next one?
I got the next one. The second one says, which of the following are rules that we follow when it comes to trading? Which of the following are rules that we follow when it comes to trading? A, don't follow the trend. B, never use a stop loss. C, don't have a plan. D, have a system. E, none of the above. F, all of the above. Which of the following are rules that we follow when it comes to trading?
All right.
None of the above.
D, have a plan. Follow the system.
Well,
right,
that's
y'all
not,
heard two
that's not a choice. The C means C, A, don't follow the trend. B, never use a stop loss. C, don't have a plan. D, have a system. E, none of the above. F,
Have a,
the
have a
above.
system.
D, have a
Have a
system.
system.
Have a system.
Everybody agree, have a system, right?
Yep.
That's one of our rules that we
Make a
must follow.
plan and follow that plan.
Yeah, we gotta have a system that we following and using, right? Yeah. Great job, great job. I love it. Excellent, everybody. So let's get into lesson 2. But guys, I'm so excited that I just got to share this information with you all before we get started. So excited about some information I received this week. Spoke with somebody from our group that just blew my mind, and I'm gonna tell you that when it comes to trading, we have somebody in our group that made an amazing achievement, accomplished something that only 1% of traders do. And we got somebody from our group that's accomplished that. And I'm so excited to say we got our first 6-figure trader from this group already. And
Awesome.
and I can't wait for them to share the story of their journey and how was able to achieve this. So just want to give you something to look forward to at the retreat, because I want y'all to pick the brain the whole time, get all the juice and all the details from how they've been able to accomplish this. But it's so exciting. I know you're excited, Barbara. Johnny, did you hear what I said?
Yes, I'm
I
excited.
heard.
So I won't say I'm gonna let them share and tell their story. But man, this is something, like I said, only 1% of traders are able to do. If you understand, when we talk about trading, that 85, 90% of traders lose money when it comes to trading. That's why they don't continue trading. And to get to a point of being a 6-figure trader, that's a huge accomplishment. And makes me, I don't know, just my stomach just turns all over. I just can't stop thinking about it. But let's get going here. Hey, Barbara, I just thought about something.
Yes, sir.
I'm gonna send you some stuff while we going over this that I may want you to share the screen. Okay,
Okay.
send you something in Telegram. But on lesson 2, everybody, this is where we talk about lingo and terminology. There's a lot of different language and terms that you may not know. Or you may have heard that we need to make sure we learn and get familiar with when it comes to trading. And this is where we get into the lingo and terminology you'll hear in the industry. And first thing I'm gonna mention is that there's 2 words that are the most common used in the industry of trading. 2 words you hear all the time when it comes to trading. Whether you ever traded before, you still heard these words before. Anybody know what the 2 words are? Anybody know one of the 2 words? Who can tell me?
Bear
Buy
and
and
bull.
sell.
Say it again.
Bear and bull.
Bear and bull. Those are the most common used, common words you'll hear out of all the other words. You'll hear the word bull and you'll hear the word bear. And bull represents the market trading up, and bear represents the market trading down. These two animals are being used because of the fighting style that they fight in. When it comes to when a bear fights, he fights in a downward motion. And when a bull fights in a fight, bull, that horn, the head is in an upward motion. And bull means that you're trading the market to the upside, or that the market in an uptrend is a bull market. And the bear means that the market's in a downtrend, trading down, and it's a bear market. Two other words that you also hear that are relative to these two words that represent the same thing, kind of. Anybody know what these two words are? Nobody?
Would those be long and short?
Absolutely.
Okay.
The video queen. Come on now. Long and short. That's right. Long and short are the other two words that are also referring to the same thing as the direction in the market. So when you take on a position in the market, your position, you will either be long the market or you will either be short the market. Long the market means the same as you being bullish, ride the market up to the upside. And short the market means bearish the market, trade the market, and ride the market to the downside. Excellent. Write those words down. I know everybody heard them before, but bull and bear are the most two common words. There are two types of style of traders that we can be when we get into the market and start trading. And I'm gonna let Johnny, if you want to, talk about these two types of styles of traders. If you want to, Johnny.
Yes, sir. There are two types. Basically, there's two types of traders. One is a fundamental trader. What in the world? There we go. A fundamental trader, and the other would be a technical trader. Fundamental trader is a person that trades off of the news, off of different information that they're receiving from the from reports, from all kinds of different things. Technical traders trade basically off of charts. They say history repeats itself. People say that's not really true, but it rhymes. So if we can read the charts as a technical trader, we can have a better chance of predicting which way the market's going to go in the future. Because remember, we're dealing with futures trading.
And Johnny, is it possible to be both? Can we be both?
Absolutely, it's possible to be both. We can use the fundamentals to validate what we're doing on trading, or we can do the technical to validate what the fundamentals are telling us.
Excellent, excellent. Yeah, when it comes to trading, we sometimes we might not know what our style is. Or we don't know right now, maybe, but we will come to a point where we realize we know which one we are, and it's okay. Like Johnny said, if you do a little both when it comes to your trading decisions, but those are the two type of traders when it comes to trading in the market. And Johnny, we have different, I guess I would call them categories, but when it comes to trading, we need to know who we are and what role we play when it comes to trading, right?
Absolutely.
What role do we play in the market? And you may say, well, I'm just a little small person. I just want, trade my little money in the market and see what I can do. But when we get in the market, we play a huge role and we want you to understand your role when you become a trader in the market and who you are. So there's a couple different categories that we want to talk about. John, you want to go over the speculators and
Yeah,
commercial?
absolutely. Right. So let's when we list these, when you look at the when you go to look at information, and they talk about what the trading is doing, they usually divide those amongst different categories. One is producers, and the producers would be like the farmers in the grains, the people that are producing the products. Okay. Oil, it would be the oil companies. Okay. Gold, the gold miners, etc. All right. And then we would have the commercials. The commercial people are the people that use the products on large scale. So they're big. They're big in the market based on whether they're hedging, whether they're just buying, whatever they're doing. Okay. And then we have large speculators, and then we have small speculators. The large speculators would be like the large funds, the big banks. The small speculators are us, okay, the little guy. And we play the most important role in the whole system. All right. And you want to cover that?
Johnny, you telling me that out of all those different people you just talked about, the commercials and the producers, the Nabisco and the Merrill Lynch and Fidelity, all these people and these large speculators, you telling me that we have the most important role out of all of them?
Absolutely.
And that's important for us to know that we have the most important role in the market. We bring something to the market that the market needs and really appreciate because we help the market work. It works because of the small speculator. So, of course, because of the speculator, there's more of us than any other category that Johnny talked about. But we bring something to the market that makes it work. It all works the way it does because of what we bring to the market. Anybody know what that is? What do we bring?
We bring liquidity.
We bring liquidity, Barbara. Thank you. We bring liquidity to the market because of all the speculators in the market who are speculating on pricing going up or speculating on pricing going down. We bring liquidity to the market. When you check the market to see the open interest in the market, and you don't know what that is maybe at this time, but you will. But to see how many contracts are being traded, how many traders are trading soybeans, how many contracts are being traded in feeder cattle. Basically, we bring liquidity to the market. We want to be able to buy or sell any one of these commodities that are trading in the futures market. And liquidity means we always have somebody willing to buy what we're willing to sell. You know, we don't want to get in the market. What good would it make if we made $10,000 on a trade and we couldn't sell it to get out of it to realize that profit of $10,000? Liquidity is what we're talking about. We bring that to the market and make it work the way it works. And that's what makes us so valuable. We're just speculating on the price movement. We're not in the market because we actually want soybeans or feeder cattle. We're trying to speculate on the price movement and make a gain on the price moving. We just want prices to be moving. And that's our role in the market. Now, when we also talk about the market that we're trading, keep in mind, we're trading what's called the futures market. All right. This is where commodities trade. In the futures market, this is where we trade with contracts. And if you ever traded in the stock market, you know that you trade with shares in the stock market. If you ever traded crypto, cryptocurrency, you trade with coins. So we talk about contract. You keep hearing contract. What in the world is the contract they talking about? And we want to go over what is a contract, a futures contract. What is a futures contract that we're gonna be trading? What does it look like? And we're gonna get into on the next call. We're gonna talk about contract and even go look at specifications that give us detail of what a contract looks like, what it in detail, what it involves. What I want to talk about a contract and what that means, because it's an agreement. That's what a contract is. It's an agreement. But agreement between who, Johnny?
Two individuals.
A buyer and a seller, right?
That's correct. A buyer and a seller.
That's right. That's what the contract is. And we want to make sure we can go back to this. So I want you to write this down. I'm gonna give you the definition of what a futures contract is, because that's what we trade in the futures market. Okay. So a futures contract is an agreement between a buyer and a seller, where the buyer agrees to pay a specific price for a specific quantity of a commodity that the seller promises to deliver during a definite month in the future. I'm gonna read that again. A futures contract is an agreement between a buyer and a seller, where the buyer agrees to pay a specific price for a specific quantity of a commodity that the seller promises to deliver during a definite month in the future. That's the definition of what a future contract is. I want you to write this down also, because this is something you need to understand. A futures contract can be bought or sold at any time up to the date it becomes due. So if you haven't noticed, you see me posting charts and stuff in the room, and you'll see a certain contract month. It may say March, or it may say May, it may say July, but these contracts have contract months. And that's what these future contracts are based on. They have contract months, and this is an agreement between a buyer and a seller. And that's what those contracts are all about. Johnny, anything you want to say on that before I move on?
No, I don't think so.
All right.
I think you covered it pretty well.
Okay. So I want to add something right here about this, what we're talking about. And futures trading has been around for a long time. Okay. And you may have just heard of it, or you may have heard of it a long time ago and didn't know what it was. But it's been around for a long time. Matter of fact, this market got started all the way back in the 1800s. Okay. Matter of fact, back further than that, it was 1700s. It was 1710 to be exact in Japan when the first market started. And then in London in the 1800s, 1877. That's how long these markets have been around. And then I believe it was 1878. 1877, one of the two, when the market started in the US. Okay, so that's how long, and that's the time frame these markets go back. And I also want to make sure we talk about the fact that when the market started, it began in Kansas. All right. That's where we started futures trading at. And then the Chicago Board of Trade in Chicago opened up. But we've been trading in Chicago ever since then. And the biggest commodity exchange in the world is in Chicago, the CME, Commodities Mercantile Exchange. So if you want to know where all this trading is being done at, that's where it's going to be being done at for the most part. Some of it will be coming out of London, some of it will be coming out of New York, but most of our trading will be coming out of Chicago in that exchange. Anything you got, Johnny, before I move on?
Well, it's kind of interesting. Abilene, Kansas. What's Abilene, Kansas known for? That was the railhead where all the cows came to be packed up to go to Chicago.
Mm.
The other thing I think I guess I could have talked about this earlier, but we can talk about it now as well. Why do we have futures contracts? What is the importance of the future contract? Okay. And the importance is to add stability to the prices of the commodities.
Mhm.
If the majority of the cattle are sent to the market in November, and this is another term that you'll hear in the future, is the new crop contracts. But if all the commodity came due at one time, then when it came due or when it all came to market, there would be a flood of commodities, and the prices would go down. And then when all the commodities were used up, then the prices would swing very highly in the opposite direction. So by being able to spread the purchase and the buying and the selling around the year, then it adds stability to the market.
Excellent, excellent. And Johnny, we talked about the futures contract, but I want to also talk about the commodity. We keep saying commodity, and I want to give you what is a commodity. The commodity is a necessity, okay? A necessity that the world needs. A commodity is a need, not a want. It's something that the world needs, and that's what made me gravitate to this market. These are something that, as long as people are here, as long as there are people on this planet, they're gonna always need commodities. And that's why these markets will never go away. And what's trading in these markets are so valuable because of the fact that they are needs, something that the world needs. People need these commodities. But I got a call this week, and I want to share this because she was saying, I'm trying to understand, why or how did certain commodities get chosen to trade and some of them are not? Why are certain things that I think are commodities are not? How come I don't see them in the futures market? And then she said, well, so anything, any food or something like that could be added to the futures market at any time then, right? I can't say, I don't know. But when you say any food, I can tell you there's one that I know won't be added. There's one that's been banned. I don't know how much, we all are aware of that, but
Please tell me
onions,
it was broccoli.
onions have been, onions cannot, let everybody know that onions have been banned. There, a guy named Vincent back in the day, long time, he single-handedly cornered the onion market. And onion onions was banned from trading in the futures market. Also, part of the reason was something to do with the way they perish, Johnny. You know, they're perishable. But it was mostly by the fact that he cornered the onion market. And anybody heard of a guy named Gerald Ford? Yeah, Johnny, y'all might have heard of him back in the day. He was the president, I think, right? But Gerald Ford banned, he actually came out with an act, the Onion Act, and banned onions from being traded. So I know that one won't be trading on the market, to answer her question. And but yeah, I thought that was some good questions that she had. But
Thought it because
Johnny,
it made everybody cry.
yeah, it's an actual real act. The Onion Act was passed, banning onions from being traded in the market. So also too, I wanted to say this because I learned something new that I didn't know. I was able to observe a phone call this week, listening in to a call, and I heard the broker say that they had acquired TD Ameritrade. I didn't know that Charles Schwab had bought TD Ameritrade, but I've never recommended them over all these years we've been doing this. We recommend certain platforms that we learn about, get familiar with. But I actually observed some excellent service that I was very, very impressed with. That to the point that if I didn't have an account myself, this is who I would probably be going to get my account with, because the service that I heard this broker provide, and the patience and the time he spent on that phone going over and walking through different things on the platform, that was very impressive, very impressive. But didn't know that TD Ameritrade was bought by Charles Schwab, Johnny.
Yes, sir.
Yeah.
Yeah, I
So,
knew that because my little brother got new checks. New. He goes, I don't have an account there. I go, you do now.
oh man. Well, I know we talked about the speculators, and then we talked about the fact that we can trade contract and not shares and coins. Anything else you want to go over, Johnny, before we get into some Q&A?
No, we're going to cover a lot of this stuff in more detail on other calls. You know, when we get into looking at bar charts, you're going to see all the different commodities that are traded in the contract months, et cetera. So, no, I'm good.
Okay, great. All right, so I know Barbara, I know I might have messed up. I know you wanted to speak after you did the disclaimer, and I might have stepped over you. Did you want to say anything about April?
Yes, I did want to mention, Dr. Melba, I believe, wanted to say something as well. So as everyone know, we do have the retreat coming up April the 11th through the 14th. This is an amazing opportunity to be in the building, in place, to learn how to really trade, to get one-on-one. Every day is going to be packed with such powerful information. I know that we get on the Zoom call for an hour every Sunday, but it's going to be power packed with such great information. If you're hands-on, if you are a person that likes to be right there in the midst, then you're going to want to be there. It's going to be epic. It's going to be life-changing. And it's a great opportunity, a great way for you to learn. This is an amazing opportunity where you can learn how to paper trade, and paper trade so well that when you fund your real account, it's nothing for you to build wealth off of that because you learned to do it by not using real money. Like I said on another call, there isn't any other type of business that you can grow that I am aware of. If it is, please correct me. I would love to know that, where you can actually learn a skill without using your real money. You can actually get involved and learn what you need to do in order to build wealth. You have that here. You can't do that with other businesses. You know, like I said, if you want to go out and do a franchise, you got to have, what is it, million some dollars for McDonald's. If you want to do a car lot, you got to have money to buy that car lot. You need money to buy the restaurant. You need money to buy houses. But with this, you don't need any money to start. And you can do paper trading. You can do the same thing that somebody else is trading that may have $50,000 in their account, but you're just paper trading to learn, to grow, to progress, to get you to your live account. But the good thing about that is when you get to that point, you already have so much education and so much knowledge that it's nothing for you to grow and build from that point. This is what this is. So this is really how we learn. The best way to learn is to learn by not using your own money. That's the best way to learn. Just to sum it all, that's the best way, when you don't have to spend your own money. So we got so many things planned for you guys every day to do. So we're looking forward to you coming. So if you haven't registered, please get registered as soon as possible. We got so many exciting things, and we're looking forward to seeing all of you there in person, that we could be together. I'm not sure if Dr. Melba has anything to say.
Yeah, from my perspective, I'm excited to meet the people that traded along with Mr. Wright when he first got started, because it's good to be in the mix of people that have been trading for years, that are six-figure traders or even greater, to be able to pull on the wealth of knowledge that they have. Because I know we have Dr. Wright. We have Mr. Wright. We have Mr. Wright to avail, and Mr. Johnny and Mr. Joshua constantly, but it's really exciting to know that there are going to be other people there that have walked the walk along with our mentors, that we can actually ask questions and, just be in the mix of that level of knowledge and understanding of the commodities trading world. So I invite everyone to just, if you're on the fence, get off the fence, get registered, and let's make it happen.
Dr. Mel, I know you're at the beach. Are you underwater? We can't see you. Oh, yeah, there you go.
She's laying on the beach.
Yeah, I'm laying out on the beach. I'm so sorry, but I'm very present.
Oh man, thank you, appreciate that, y'all. I know we got some people on the call and joining for the first time, and I want to make sure everybody got an opportunity to stay connected and plugged in to us. We do some quizzes throughout the week and try to keep learning throughout the week. And we have a Telegram group and we have a Facebook group, but our Telegram group is where our most activity is. And if you're not in our Telegram group, I want to invite you to join that group. And maybe we can get one of the ladies to put the link in the chat. So if you're not in the group, you're welcome to join our Telegram group. And I want to open it up for some questions tonight. Any comments or questions you have about anything we talked about, went over tonight? Unmute, please unmute.
Yes, I have a question, and I put it on the chat, but at the same time, I think I need to clarify a little bit more, since coming from out of town, and the event is from the 11th to the 14th. What time on the 11th should we start? So in order to make arrangements for flight, it should plan to stay overnight on the 10th and depart on the 15th, or again, what time will it end? Don't want to miss anything.
Well, I probably should let Barbara answer that. She more so is taking care of putting our agenda together. But I think it's starting Thursday is our meet and greet that's starting in the afternoon or evening. Am I right?
Yes, so the meet and greet starts the evening of the 11th.
Okay.
And we're gonna have a full day Friday and a full day Saturday. Sunday is just going to be for one-on-one appointments. So if you're not wanting to schedule a one-on-one for yourself, then you would not have to be there. You can leave out at any time. But that's what Sunday is for. So the evening of the 14th, maybe around 5-ish or so, is when we will get started with the meet and greet.
Thank you.
You're welcome.
And Barbara, can we put the Telegram link in the chat?
I did, yes, sir. It's in there.
Okay, thank you.
Quick question, Miss Barbara, you said the 14th we're gonna get started? You meant the 11th?
The 11th is
Okay.
that Thursday is when we get started. That's the meet and greet that Thursday evening. And then Friday is all day sessions. Saturday is an all day session. Then Sunday, the 14th, is when that's by appointment only, one-on-one by appointment only.
Okay, great. Now, one other question, will there be time for lunch breaks and things like that? Is there places around there to go for food and all?
Yes, we will take breaks. There'll be time to have a lunch break. Yes, sir.
Great, thank you, ma'am.
You're welcome. Tanisha has asked a question. Are there any more questions about the retreat itself? Okay, if not, Tanisha asked the question, she says,
You said the information in there. I don't see anything except, is it in the futures commodities group that you're putting this information?
for the retreat,
Yes, I thought that's what you were referring to.
yes, let me post the link in the chat for the retreat. So here is that's for the retreat. It says travel and trade too. That's the link for the retreat. You just see that I just posted it.
And then Ray, it's been posted in the Telegram group, but I'm sure she'll post it in there again too.
Okay,
Yes,
well,
I'll repost that after the call. I'll put it back in the group as well. Tanisha had a question. She said, where and how do you paper trade? She can't unmute to ask the question. Where and how do you paper trade? Did you want to answer that question, Mr. Wright, or did you want somebody else to answer it?
I'm gonna let you or Dr. Melvin take it. One of y'all want to answer a question
I'll
about
take it. I'll take it. When I first started paper trading, I went into our Telegram group, and in the section where it says files, I think is that correct, Barbara? Is that where our
Yes, it is.
there's a paper template in there for paper trading. And so I downloaded that template, physically paper traded by writing in my trades on this template. That's first. Then I graduated from that. I went on to TradeStation, and we learned TradeStation, and we started doing putting in our own trades in TradeStation. When we first started with TradeStation, there was no cost. You just open an account with like $100, and you just use their platform for paper trading, or it's demo trading is what they call it. And so after we started doing that for a second, then they started charging $10 a month. And so for $10 a month, I thought it's economical to continue to trade, because the way that their demo platform works, it's as if you're trading live with everybody else that's trading. It's not a platform where it's make-believe. You're actually trading live in the market, but you're doing it with demo funds. And so, and you get to set how much demo funds that you want to trade with and use the rules that we're teaching you so that you're learning to do it live, but with demo funds or demo money. And so that's a safe way to do it until you get to the point where I always say you feel like you're, you know, drinking or breathing or blinking. You know, most of the times we don't have to think about those things. It becomes so natural to us, you know, and every day for us. And so that's where you want to, well, that's where I want to get to in paper trading before I start live trading with real funds.
And Dr. Melvin, when you first started, you started with options, right?
Absolutely. I started with options. And when I started with options, I called in my calls like Mr. Wright does. I did not do that by demo trading. I demo traded on paper for a while, for like probably 90 days. And then after I felt comfortable, then I started calling in the trades to our trade desk and trading options that way. Correct. But I started with options before I did futures trading because I thought it was simpler and it got all the jitters out of talking to a broker and, you know, and someone at the trade desk putting in a trade for you. Because there's a certain amount of jitters that comes with doing that for the first time with real money. And you got to work that out of your system before you get to the the big funds, which is futures, you know, trading. So
Awesome. Well, I hope that answered Tanisha's question. But yeah, when you open up an account at these different brokerage platforms, most of them will have what Dr. Melvin was talking about. They will have a platform. They will have a demo account that you can trade in, paper trade in, along with a live trading account. And wherever you have your account at, look and see and check and find out if they have the demo account available. But I think Dr. Melvin and Barbara have found that they prefer to do their demo trading on TradeStation, right? Is that
Yes,
right?
yes.
Okay.
There's another question from Tanisha. She says, what's the difference between options and futures?
Okay, who wants to answer that? Josh, Johnny, anyone of y'all want to answer that one?
Josh.
Sorry, what was the
Thinkorswim is still free from demo.
what was the question? What's the difference between options and futures?
Yes, sir.
So they're both derivatives, but in the context of this group, options are just options on futures. It gives you the right to buy and sell a futures contract.
Yep. That's exactly what it is. Appreciate you, man. And options are a more affordable way, in my opinion, to get in the market. I like trading options, just like the lady said. You know, they started with the options first. I like trading with options as well. So you may see me trade futures contracts. Sometimes you'll see me trading options on futures contracts. It just depends on the market I'm trading and certain different particulars when it comes to it. But I like trading options just like I like trading futures contracts. But thanks for that, Josh.
there's also Josh put in the chat, Thinkorswim is still free from demo.
No charge on Thinkorswim. So that's good. That's good if you can trade on them on Thinkorswim without having to pay for it.
Is their platform on Thinkorswim the same like TradeStation's demo platform?
I've never used TradeStation, but Thinkorswim, if you have a live account there, they have a button called On Demand, and it's basically a demo account. gives you a fake amount and you can trade the fake amount. But I do want to add one thing for anyone who is doing the demo trading, even if there is up to date or live data, it isn't the same as trading in the actual market, because in the actual market you'll have issues of getting fills and stuff like that, which you won't have those issues in a demo account. Also, the psychology is different too, you'll see.
That's correct.
Thank you. Zuli asked the question, can you mention what specific we should look for in a contract?
Let's take the question that was asked by Tanisha a little bit further. A futures, remember what the definition of a futures contract is. It's an agreement between a buyer and a seller to either buy at a certain price and the seller who agrees to deliver on a certain date for a certain price, a certain commodity. Okay. An option is an option to buy, but with no obligation. In other words, if I want to buy or agreement to sell without an option to sell, all right, a certain option, but I have no obligation. I can let it expire worthless. So if I buy it and it doesn't go my way, it can expire worthless, but I don't have an obligation to exercise that option. Okay. However, on the other side of it, and that's the same way if you sell an option as well. If it expires worthless, you get to keep the money. But if it goes against you, then whenever that other person exercises that right or whatever, then you're obligated for that money. So the main thing is on an option, to buy an option, or to buy an option, whether it be a put or a call, I have the opportunity to exercise, but not the obligation. Did I say that correctly, Josh?
Awesome, Johnny.
Sorry, I'm in and out. I missed what you're saying. My daughter came down.
In a purchase of an option, you have the option to buy, but not the obligation.
Absolutely. That's correct.
So you'll learn that the worst you can lose is the premium that you use to buy it.
Great. And one of our lessons that we have, we dedicate that whole lesson to trading and understanding how to trade options. So, do we have any other questions, Barbara, that you said that we cover everything?
Zuli had asked the question, could you mention what specifics we should look for in a contract? That's the last question we have in the chat.
Well, we're gonna get into that on the next call, what the specifics of the contract are, and go and look at it, Zuli. Well, there's a lot of specifics we look at when we go look at a contract, the specs of the contract, and that's part of our lesson 3. We're gonna get into looking at a contract and going through the specifications of that contract. So a lot of things in there that we need to understand. Very important to be able to trade the contract. Great, Carl. Any more questions or comments before we wrap it up? I think that's it, y'all. Looks like everybody's good. And if that's all the questions that we had, I want to tell everybody to keep your eye on the chat for any quizzes that may come in the room during the week. And if you need the link, I think Barbara will be putting that in the room for those who want to come to the retreat. We want to see everybody in the building. And thank you for jumping on the call, everybody. Have a great week and good night.